Are you tired of losing money on IQ option? Do you want to learn how to choose a winning strategy that works for you? Well, you're in the right place. Choosing the right strategy is crucial for successful trading. But with so many strategies out there, how do you know which one to choose? Well, sit back, relax, and let's get started on how to choose a winning strategy on IQ option. The winning strategy for you is the one that will make you money real time. And obviously it is making you cash doesn't necessarily means that others also can with the same strategy. In this sense, all of those strategies are the best strategies for a particular person in a particular market condition. Also, one factor is crucial: the broker platform you're choosing will have a great influence on what strategy will let you get a huge outcome. So, which one to choose, and how to choose, and what platform can provide such a great profit level? Well, this video will show such a platform along with some really great and useful strategies. First, let's talk about choosing the platform that has a great influence on making a strategy.
The platform on which you'll trade is one of the most important parts of your journey. Now, you can see even most of the trusted brokers do try to manipulate the asset price sometimes on their platform to harmonize their profit and for some other reason. Well, in most cases, the manipulated amount is quite low. Now, you can ask why they are doing so. To get the precise answer, we'll suggest you check out this video. Scammers are different as they will do that frequently and with a huge price difference from the real-time market. For example, you can study the price difference between the IQ option broker platform versus the TradingView platform that shows the real-time market side by side. Let's choose the same asset, same time frame, and the same chart types. See, the difference is small. But on any scam broker, the price gap will be significant. However, after analyzing all these issues, you should choose your broker platform and build your trading strategy that will help you win on that particular broker platform. We can mention some of the good strategies that might help you while trading here on IQ option broker platform, like grid trading strategy, the martingale strategy, dual stochastic strategy, the blade runner, elder impulse system, volley band bounce, and so on. You can study them thoroughly with all the details in the article linked in the description below.
The second step you should take is framing your timeline. Time frame, the most influential aspect of a trading strategy that questions how long you would like to keep your trades open. It can be for a longer period of time like weeks, months, or even years, or it can be for shorter periods like for a day, an hour, or even for a few seconds. If you're comfortable with a shorter time frame, you may consider focusing on studying the technical analysis tools and indicators. They will help you to evaluate the market performance on a shorter time frame and help you make quick and more precise decisions. Disclaimer: there is no analysis tool that could guarantee absolute success. You have to study and choose the perfect one that is best suited for you with a trial and error process. On the other hand, if you're more into long-term trading, fundamental analysis will be preferable for you. That means you need to stay up to date by monitoring the financial market news and events. Why? Well, financial news and events have a drastic impact on related assets' price. Moreover, you can even build a strategy that is combined with both of these approaches.
Next important aspect is preference of instruments. The second aspect that you need to think about is trading instruments or assets. Yes, your preferred asset list for trading has a great influence on how your trading approach should be. You may consider mixing a wide range of assets to diversify your trades. Or you can choose a few instruments and practice on improving your skills on those. So, which assets do you mostly focus on when trading? Well, understanding your target will help you to choose your preferred one. That means you need to study and get to know them. There are also some other aspects to consider while choosing which markets are ideal for you. For example, your trading styles, available funds, location, and the time of day you trade or wish to trade. And when you become sure about your preferred assets, you can pursue your trading approach based on it. Thirdly, you have to listen what your experience says. Before diving into the real trading world with any pre-made strategy from online, ask yourself what level you're on in this realm. If you think that you're still trying to explore all the peculiarities of trading, you should not jump right in real trading. Because you can't be profitable with other people's trading strategy that they have built up gradually based on their experience. So, before trading with the real fund, you should go for demo experiments. Here, you'll get time to learn all the important ins and outs of the realm that you might need in your upcoming journey. This is the level where you can try out different simple strategies and learn to use various graphical tools and indicators to build up a working trading strategy. And gradually, you can dig deeper with more advanced trading approaches.
Finally, you need to make up your mind on what you really want.
Before even starting, you should be very clear about what outcome you want from your trading journey. Why? Well, if you can visualize what you want, you can set up your plan along with a risk management approach. Also, calculating your capital and the amount of funds you are ready to invest and, potentially, even lose, will help you to decide what methods you prefer to use and help establish the trading routine. One more thing you need to incorporate here: winning rate. That is the ratio of your win trade, in terms of total trade you made, at a particular time. But what is a good risk-reward ratio? And how should you measure it? Some says you need a minimum of 1 to 2 risk-reward ratio. That's totally not something you want. Why? Because the risk-reward ratio is meaningless on its own. Hard to believe? Here's an example. Let's say you have a risk-reward ratio of 1 to 2. That means for every trade you win, you make $2. But your winning rate is 20%. So, out of 10 trades, you have 8 losing trades and 2 wins. Now, let's do the rest of the math. Your total loss will be $8. Total gain will be $4, so your net loss is $4. By now I hope you understand the 1 to 2 risk-reward ratio by itself is a meaningless metric. If you have a risk-reward ratio of 1 to 3, it means you're risking $1 to potentially make $3. A good deal. And if you have a risk-reward ratio of 1 to 5, it means you're risking $1 to potentially make $5. That's a great deal. Hope you got the point. Planning a personal trading strategy may seem complicated and really intimidating. However, once you break it into different components, it is much easier to manage. Then, you don't have to rely on another trader's strategy to get a winning trade, rather you start to win on your own.
Also, in IQ Option, you're going to get $10,000 virtual amount for your practice. Take full advantage of it while testing out your strategies. Don't waste your capital on testing, rather use it for real trading after completing your practice session with the virtual amount.
That's all for today. Thanks for choosing BinOption as your guide on your trading journey.